Hi guys.
Hello.
So we were a little late, technical difficulties.
Realtor time, as they say.
Yeah, Kevin's time.
Yeah, I don't know about Kevin's time. Well, welcome to another Facebook Live, Real Estate on Tap. And, today we're going to talk about the hidden costs of home ownership. As some of you may or may not know, there's a lot more than just the offer to purchase and giving somebody a purchase price. There's things that like home inspections. There's things like appraisals. Some of these, again, are going to hit the wallet, and simple things like moving costs. So we're going to get right into it today. And as always, we like to interact with people. So please, let us know if you have any questions, and we'll answer them live here on Real Estate on Tap. Couple topics here. Let's talk about closing costs. I'll let you take it from there.
So every bank pretty much is going to charge you closing costs. Not all banks' costs are the same, so they do fluctuate. If it's a mortgage broker to a credit union
To a banker,
things in that order. So if you're worried about what your closing costs are going to cost, definitely shop around beforehand and get a number that is comfortable with you or for you. I would say majority of bankers or lenders are about 3% or 2%.
Well, they all vary in their
Give or
fees. Credit unions tend to be sometimes cheaper. And it's, basically you pay for what you get. And I've seen that out of my 19 years of doing this. I'm sure Ellie can, she was a mortgage processor back in the day. So,
everything's changed since then.
Everything has changed, but you do the service you expect. Your lender, like banks. I mean, it's 8 to 5, and when you are writing an offer on a Saturday or a Sunday, some are not going to be able to answer their questions or say, hey, can you give me an idea what my payment's going to be on this house, because taxes vary from Milwaukee to Waukesha too. So there is no set cost, but Truth in Lending will tell you that. So if you have questions about, hey lender, what are you charging me here? The Truth in Lending, ask for that. That's going to basically disclose all the fees that are incorporated into the cost of getting your loan.
Obviously, rates also play a part into that. If the rates are high, you're gonna obviously have a little bit of a higher closing cost as well.
Yeah, and rates are, well, as we know, varying daily, and they're very volatile right now with the bond market. If you don't know, the bond market follows the 10-year note. So if you want to keep an eye on what rates are doing, follow the 10-year note. And that's going to tell you really basically, are rates going up or rates going down, because that's what your interest rate is, gonna pretty much follow in that sense. But rates are going to change and fluctuate. So you might be quoted something last week at 6%, and today it can be 6.5. So really what you want to look at is appraisal costs, funding fee was what they call it, other fees that they have on there, your credit report,
flood certifications,
occupation verification.
Yep, employment verification.
Yeah.
Also, a lot of people don't realize that you've got a lot of lenders, especially if you're a first-time homebuyers, require that you escrow your taxes and insurance. So some require that you pay the first year in full.
As insurance, that is.
Insurance, yes. And then taxes, keep in mind that seller gives you a credit from the first of the year to the day before closing. So that credit amount goes into your escrow. And then there's generally a cushion in case your taxes were to go up and down. So the lenders add that in as well. I believe it's about a 3-month cushion or something in that order. Don't quote me on that.
Yes, 3 months cushion is what the lenders like to have as far as the taxes and insurance. Like Ellie said, some of the lenders will want you to pay the full year's worth of insurance up front.
And then escrow.
And then you'll escrow, so you always have a cushion. And sometimes if the cushion is too large, the government steps in and says, nope, this cushion is too large. We're going to give you a credit back. So, again, I think we can, all say if you'd like us to bring a mortgage originator on, we'd be happy to bring them on.
Or not loan officer.
Loan officer. We know quite a few great people that do excellent work, who are going to walk you through, especially if you're a first-time home buyer and don't understand the process. That are going to walk you through, but that's something, again, we can bring them in and talk a little more detailed for you guys, if you have questions on some of that. But again, that kind of gives you that truth in lending. To me is really going to break down what you're going to be looking for as far as costs go. And as they say, like a doctor, shop around. And I say shop around. All banks charged in banks, lenders, originators, however you want to call them, they charge different rates. Period. Obviously, our job is to find you the best rate at the same time, but find you the best service.
And a lot of these lenders and banks can give you estimated closing costs. So don't hesitate to reach out to them if you're like, oh, I want to work with this particular bank. What are their costs? You can go ahead and call them, and they should be able to give you. It's going to be a broad number, but at least it will get you somewhere or two closer to what your answer wants to be.
And keep in mind, when you do get a truth in lending, your originator is going to puffer those numbers.
Yes,
okay.
Your first truth in lending is not your final.
And what I mean by puffer the numbers is basically they have to stay within a certain percentage. I think it's 3%.
I believe that's accurate.
3% of what your final numbers work out to. And what I mean by puffer is if it changes more than 3% before closing, they have to delay closing. And that's a government thing.
You don't want that to happen.
And you don't want to delay closing, not in this market. You don't want to default on your contract with the seller. But they can, again, the government steps in and says, nope, we need your numbers changed. If they went up more than 3%, believe me, they're going to stop and say you need a 3-day wait for redisclosure, and that again can basically stop your closing from happening. Because that's the government rules, unfortunately. And as we all say, the one who makes the gold makes the rules.
A couple other fees, title fees. You do have to pay for a loan policy. Sellers pay for the owner's policy of their side of things, but you do also have to pay for a loan policy. So keep that in mind. And again, those numbers do fluctuate as well. Appraisal fees. Appraisal is generally something that has to come out of your pocket before closing, so that is an upfront fee. And then and those are generally between $500 to $700.
Depends on the type of loan.
Yep.
FHA, VA, or conventional.
Again, if you have an inspection written into your offer, that is also a fee that has to be paid up front.
Yep.
Can't roll either one of those fees into your loan amount.
Yep. And I say conventional, FHA, VA. We have WEDA, which is a Wisconsin state loan.
For first-time home buyers.
For first-time home buyers, yep. We also have USDA for people that want to buy in rural areas that do offer 100% financing also. So there's different loan programs out there, and I think one of the biggest myths out there is simply, Kevin, I need 20% down to buy a home. That is completely false. FHA, 3.5% down. If you're a veteran, God bless our veterans, they can come in with 0% down. WEDA is, I believe, is a 2 loan profile. They have a first and a secondary. I haven't done a WEDA in a while, but it's a great program out there. I can get more information for anybody who wants to know about that. And then your USDA is also 0% down too. So, and that's in certain areas, and there's a map that I can be happy to share with you guys, or anybody who wants it, that will tell you what areas are going to qualify for those types of loans. And if not, I can't answer a lot of the lender questions, that's for sure. Their world's changing like our world, and that's daily.
Yeah, daily.
So we can definitely get you in the right, in the right hands to help and assist you for what you're trying to do, and get somebody who's very knowledgeable about those types of loans.
Another thing that people forget about is earnest money. That is money that needs to come directly out of your pocket at the beginning once your offer is accepted. Now, keep in mind that dollar amount does go against your closing costs, but it is money that has to come directly out of your pocket at the beginning. And that is based generally on your purchase price. So that's another thing. We talked about homeowners insurance. If you've got condo association dues, or homeowners association dues, so again, that's another prepaid item. So seller will give you a credit, and then you have to pay for the remainder of the month. Again, seller gives you a credit for their portion, depending on where you land in the month for the closing, but then you are responsible for the rest of the month, or year, depending on what it is. So that's more money out of your pocket that you're not always aware of.
Prorations.
Prorations,
Yep. Prorations.
Yep.
That was the Sorry to jump real quick. HOA you're talking about, right?
HOAs,
Yep.
yep.
Condo
Yep.
fees, or even
Homeowners
homeowners
fee, yep.
associations. Yep. That can vary. But again, you do get a credit from the seller. Not always. It can be part of your negotiations, as we talk about
Yeah.
ways to stand out in your offer to purchase, and we'll talk about that in a little bit. But that's another thing that you can say, hey, Mr. and Mrs. Seller, I'll pay the entire year's worth of taxes, or I'll take over the homeowners. If it's condo dues, I'll pay for the entire. You don't have to prorate me. I'll take care of those. So those are all great things. And again, if you got questions, we're here live. So please feel free to reach out and ask us here.
Yep.
Jumping up. Go ahead. Talked about moving expenses.
Nope.
Okay.
So depending on where you're moving from, those are expenses as well. I mean, if you're coming from out of state, you're going to have to, unless you are He-Man or She-Ra, you're more than likely going to have to get movers or your entire family to help you, but they're going to want pizza and beer if you recruit them.
Pizza and beer does not work anymore, trust me. People don't want to blow out their backs for pizza and beer, so you're going to have to do a little something better
beer.
than pizza and beer. Yeah, I mean, again, moving expenses, we can connect you with some local movers if need be, but you're going to need packing supplies, boxes,
Tape.
Tape.
You always run out of tape.
Bubble wrap.
Yeah.
All those things cost a few bucks when you go try to buy those things. Those are some hidden expenses, as we talked about. If you want to rent a U-Haul, or even it's just a trailer to throw on the back of your truck while you're moving some things. Again, extra expenses that you're not accounting for.
And if you do have to hire movers, it is a good thing to move midweek or mid-month, because the rates tend to be a little bit cheaper for movers. Obviously, beginning of the month and end of the month, they're going to be a little bit more busier for them, so they're going to want to charge more.
Yeah, most first-time home buyers, and the reason why we always tend to have more closings at the end of the month is simply the fact that because unlike rents where you pay and then you get to live there for a month, we live there in a mortgage world, and then we pay them
Pay in
arrears. Yep, exactly. Paying in the arrears when you're a first-time home buyer and maybe bringing every penny to the closing table just to get yourself a home. When we were talking about closing the end of the month, basically, if we close on the 30th of the month, let's just say it's only 30 days in that month, you're bringing in only 1 day's worth of interest to the closing table, versus if you were closing the 15th of the month, let's say it's again 30 days in that month, you're bringing in 15 days worth of interest up front. So it allows you to keep a little more money in your pocket, but then you skip the following month and your first payment would be due the next month. So you actually skip a month.
Payments.
Yep, payments. So even if you're like, my apartment, my apartment's lease isn't going to be up till the following month. Again, remember, you're not going to have that double payment.
Yeah.
So keep that in mind. Again, if you're looking to buy that, you don't have that double payment, and take advantage of that stuff.
Yeah.
And then moving expenses. It's a great time to declutter, and those old college books that we now have AI for and Google for,
Yeah.
you can get rid of. I kept some of my college
Kevin.
books and said, well, what am I? 10 years later, it's like, what am I doing with this stuff? Get rid of some of that stuff, the clothes that don't fit, the things that you don't pull out every year. So
If you haven't touched it in a year, you don't need it.
You don't need it. So good time to get rid of that stuff, so you don't have to pay somebody to move that
it,
stuff.
and then
yourself.
find a place in your new house to put it.
Mm-hmm.
Sometimes you've got repairs and things that need to be immediately fixed. And again, depending on what type of offer you write, some of this can be negotiated in, but this crazy market, a lot of it is not going to get you anywhere to get an accepted offer. So, window treatments, things like that, blinds, those are expenses that people don't realize that they're going to have to eventually. You can't keep blankets on your windows or towels on your windows
Especially
forever.
new houses.
Yep.
The neighbors frown when you have your newspaper covering the windows or blankets on that. But there's a lot of expenses that when people look at new construction that they don't realize. Like I always said, window treatments. Like, okay, there's definitely some expenses there. Um, you were talking about repairs. Again, in this marketplace, we're seeing a lot of what we call inspection waivers. You're basically just telling the seller, look, I want to buy your house and I do want to have an inspection. However, if A happens, I'm willing to do B. And what I mean by that is simply saying, I'll waive the first two, three, $10,000 worth of any repairs that come up in the inspection report. Repairs, would be defects or just homeowner
Minor,
maintenance,
yeah.
things that may come up that you're not going to be thinking about. So, you got to take that into effect to say, if I'm willing to waive it, there may be some things that you might not want to say, I'll wait till next year to get to. Some of it is simply grading. Every house needs grading. I don't care. Every home inspector, grading, grading, grading.
Yep.
That's
And
common.
we've had that conversation before about grading.
Yep, we talked about that
Basement
in our
issues.
spring
Yep.
rainy weather. But those are things you want to jump on now and take care of versus later. The good thing, grading's as cheap as dirt, but other things could be a roof repair that you want to make sure again get done so it doesn't cause more damage, mold in the attic. That you're going to get that repair taken care of quickly. Again, it could be really anything.
Outdated appliances. I mean, if you're buying an older home, chances are the appliances are going to be older. If you want to save on energy costs and things in that regard, then you're probably going to want to update those items as well.
Things break.
Yeah.
Things break.
Though
And,
age is not a defect.
Murphy's Law sometimes too. So having a little bit of a slush fund for those items that again that either do the inspection waiver for, or knowing that you're going to be getting in the house and there's some things that you need to take care of sooner or later. Other couple things here we talked about furnishings ongoing. Utilities that again people don't necessarily think about. You could be on well and septic, and it's going to be a what I call a I don't want to call it a free lunch because when you run your well pump, you're paying for electricity. So yeah, water's cheaper. Same thing with their septic. You're not getting a sewer bill, but there's things that you're going to need to do to maintain that septic. So I don't want to say it washes out, but some things are not going to be that constant bill that's going to come every quarter for you in regards to water and sewer. Couple other things here. Let's talk about, I know we brought this up last time. Let's just talk about basically offers right now. And I think, I should say, I don't think I know, with some of the listings I've had lately, let's put it this way, it's a very competitive market out there. And
This should be a whole nother live if you ask me.
we'll touch on it briefly, and maybe we'll do that here on the following one. But I do want to touch on it briefly. I'm flabbergasted by even good agents, and I say good agents, well-known agents in the industry. I'm flabbergasted by the incompetence of writing an offer. And I simply say that as in when you're on the selling side and like what happened to me last week. I'm on the selling side. I'm the listing agent on the property. I'm working for my seller, and we get great activity on the home. And there's live for you, dogs barking. Great activity on the home. What I'm seeing is, I don't know if it's because agents are rushed right now and they're trying to send an offer so quickly, But I'm seeing a lot of just simple mistakes, and I say simple mistakes because they're really simple. And if you're a buyer losing out in this marketplace, really dig into your offer. What I mean by dig into your offer is that look it over and start reading some of the I don't want to say contingencies. Well, contingencies they're filling out, but anything else they're putting in there, and really pick it apart. I've seen stuff from some properties in a village, but they write city. I know that's minor, but when I have 8 offers I'm looking at, I don't want to play the counter offer game. I don't want to be correcting somebody's offer. But I think the one that really stands out to me as of late is this the principal and interest payment. So in the financing contingency, we have that payment shall not exceed a certain amount of dollar amount, and that's only principal and interest.
Based on the interest rate.
Yeah, based on the interest rate. So you take the calculation and you take the interest rate that your agent writes in there, and then you take it and you put it into a mortgage calculator. There's tons of free ones online. They're actually inside of our forms, whether you're using Zip Forms or SkySlope or any of the other programs. But there's a calculator there that allows you to calculate that interest, that principal and interest shall not exceed a certain number. Well, I don't know if we just don't know how to do math or they're not using a calculator or whatnot, but I've seen stuff that's extremely low, okay, meaning that it doesn't protect my seller when I have a low number there, because that's an automatic out for the buyer who wants an out. I've seen stuff that's extremely high. That means that my seller has the buyer locked in even more, because if interest rates do fluctuate up, yes, you have sometimes you have just a fixed rate financing contingency, but even if that payment it turns out to be higher, now my seller's basically in the driver's seat. And then I've seen some stuff that's not just either left blank or just numbers that I don't even know where they pulled from. So that's one area that I think, again, if you're a buyer missing out in this world right now, especially in the market here, look at these offers, read them, make sure they're doing these correctly. I've just seen too many mistakes again out there, and that could be the difference between you getting a property and not getting property. Because at the end of the day, if I'm a listing agent, I have 2 offers that are basically the same, but one is full of mistakes, and they could be the most minute mistakes.
Doesn't matter.
It doesn't matter. I'm basically going to take the other offer because
it's well written, and
it's
you
well
know
written.
that agent is going to do everything they need to do to get you to the closing table.
But it's also competence.
Well,
it comes
but
down to
again,
competence.
some of them rush. So are they? Like Kevin said. I mean, I admit I'm not perfect.
We're all human.
I've
We're
made
all human.
mistakes, but when it's consistently throughout the entire offer versus just one little mistake, it definitely does make a difference. Sorry, the dog's out here. You got one little, okay, city or village. Okay, yes, you should be checking that stuff. But if that's the only thing that's in your offer that's incorrect, okay, I can see how that you type but if it's okay, this, that, well, yeah, I don't want to work with this agent that can't even write me a proper offer.
Well, and especially when it comes down to the transaction of the financing contingency, and that's a huge one, if you ask me, because that's kind of the end of the ball game, looking for loan commitment. And if a buyer again wants to truly get out, or in that case that contingency is written wrong, that's basically again, depends on what way it swings, but basically an automatic out. Any good attorney is going to pick that up and say, yeah, your contingency expired or defaulted or however you want to call it, and we can get you out of this thing, no problem. And as an agent working for my seller, man, oh man, I don't want to be caught with that. And my seller's all packed up and ready to leave, and all of a sudden they have this little mishap that again gives them a free way out. So again, guys, really look over your offers if you're not feel like you're getting things, and again, we're happy to talk if you want to give us a call. But again, we have to follow certain rules too, in that respects of if you have a buyer agency and things
fair
like that.
housing laws
Yep.
and stuff like that.
No,
Yep,
no,
definitely.
not fair housing laws,
Wow.
but just buyer agency and things like that. But we are happy to hop on a call and talk things through with you. And so again, feel free to reach out with us.
Yeah,
Reach
and like
out
I
to
said,
us.
this is a conversation that we could do for hours, but I think we need to save it for a different live.
Yep. So I hope you guys learned something today. Anybody
Any
want to chime in?
questions?
Questions? We'd love to hear from you guys. If you got any comments.
And again, like we always say, if there's something that you are interested in hearing about, shoot us a message and let us know. We're able to, we're open to suggestions on topics. Good Lord, I've only had 2 sips, guys.
Real estate on tap.
Yeah. Woo. So yeah, if you've got things that are like, I wonder, throw it at us. Maybe we know. Let's talk about it.
Yeah, we're always open for a conversation.
Yep.
We're here to help. That's
Yep.
basically, and again, everybody starts from the bottom rung of the ladder, so they need to learn. And we're here to help people out. And unfortunately, sometimes in this fast-moving market, I can't sometimes teach younger agents like the older agents have taught me. Hey, Kevin, you did something wrong here, or reach out and have that conversation to say, we like your offer, but there's a lot of things you need to clean up, and I'd rather not counter offer you. Basically, here's some things you need to do and clean this up and resend your offer over. So,
but even that being said, if you're an agent watching us right now, if you've got questions, how we do things or why we do things or anything in that regard, reach out to us. We've been doing this a long time. As Kevin said, I mean, we've had great mentors in our lives that have taught us the right way to do things.
Yeah, the Marciniak team itself has over 50 years of experience, not to date us too much, but we have combined experience in that respects, and we have a lot of great background of just not even being a real estate agent. As I like to say, Ellie probably knows more than I do in the real estate world, but she...
Sorry.
Good old dog. But she's also worked in the title business. She's got that mortgage broker background, being a processor, and so she knows a lot of things. And she's a notary.
Yes, I am a notary.
So we can do remote signing for you.
If you ever need anything notarized, I only have a $150 fee. Just kidding. If you need something notarized, reach out to us. I'd be happy to help you guys.
All right. Well, with that said, sorry for being late, but
Happy Tuesday.
Another Real Estate on Tap. Again, feel free to reach out to us. Have yourself a great day. Happy
Talk
Wednesday.
to you soon, guys.
Yep. Thanks. Bye-bye.